Welcome to Biztech's CEO Conversation Show, the show where we engage industry leaders to share insights into how they run and grow their organizations. Today, our conversation is with Dennis Martin, Group CEO of CTOS Digital. CTOS Digital Berhad is the holding company of ASEAN's leading credit reporting agencies and is headquartered in Kuala Lumpur in Malaysia. Now, it is recently listed on Bursa Malaysia and currently has a market capitalization of approximately 3.5 billion ringgit, or about 830 million US dollars. Now, Dennis, welcome to the show.
Thank you very much, and thank you for having me on.
Now, Dennis, can you just start by giving us an overview of the CTOS Group?
Sure. Well, CTOS is the leading CRA here in Malaysia. We've been in the country for over 30 years, founded by a couple of brothers who grew the business very well, and then it was acquired by a PE firm about 2014. We also have an investment in Thailand in a company called Business Online, which is a publicly listed company and the largest commercial credit rating business in Thailand. We have other investments in Malaysia. In the early part of this year, we acquired 100% of another CRA here called Basis. It's now called CTOS Basis. So primarily our role is in providing digital solutions to enable people to make informed decisions.
Okay, and give us an overview of some of your key solutions and products that you offer, because obviously you've moved away from being purely a credit rating agency.
Yeah, right. And in fact, technically we're a data business. So we focus on providing data to help people make good decisions. But the reality is data alone isn't good enough these days. It's all around how you can deliver that data or the insights that you can deliver as well. And so we really are a true digital organization now. We do everything in what we call the customer life cycle. And so a customer life cycle is how our customers engage with their customers. How do they attract new customers? How do they onboard them? How do they make decisions around them, manage them, and so on? And so over the last 7 years, we've really built out a suite of products which sits in every one of those areas. And so, everything from our eKYC, which is our digital onboarding process. It's funny, it wasn't that long ago here in Malaysia that if you wanted to go open a bank account, you physically had to go into a branch and do a thumbprint scan.
Yes, of course. Not even that. I mean, even a thumbprint scan was a pretty new thing. We were still using ink and pads for not too long ago.
Right, and that was something new for me. I've been in the digital environment for a long time now, and hadn't seen that. And so, a couple of years ago, we developed a product called eKYC. We worked with the regulator BNM and went through their sandbox and came out the other end. And then COVID hit in March last year. And here we had a digital onboarding product ready to go. And then and there was already a demand for this, which is why we built the product. But the reality is COVID drew that, really powered that demand, because people didn't want to go into bank branches anymore. People wanted to stay home or stay in their office or wherever they were and do their business, right? And so this really enabled that to happen, and that's why it's been a huge success for us. Just one example, we've got others. We're the only organization, only business in this part of the world that has a fraud bureau. Now, a fraud bureau is a platform where banks share information to detect fraud, and they share it through a platform called CTOS Secure ID.
And so one of the things is then, which is very clear, yours is another business that has been propelled forward because of the pandemic.
It certainly helped. I mean, like all businesses, we were impacted. There's no doubt about that. I mean, a big chunk of our business comes from the banking sector. Their transactions slowed down. They stopped writing new business in the lockdowns. And so we did have that fall off from the transaction side. We're fortunate that about 75% of our revenue is recurring. So that didn't change. But we had that transactional business fall off. A big chunk of our business is also in the SME sector. And the SMEs, obviously, the doors were shut and no one was home during the lockdown. So it's very hard to talk to them. And so we found that difficult as well to actually reach out and talk to them about joining us. And we have about 17,000 SMEs with us now, and it's growing steadily. But during the lockdown, it was very difficult. However, what we had is we had a plan to roll out new digital solutions prior to the lockdown. And during the lockdown, we developed new solutions to support these organizations. For example, in the banking sector, they weren't writing new business, but they wanted to grow their existing portfolios. Now, how could they do that? How could they learn to upsell and cross-sell and understand the risk of those portfolios? And working with our data scientists, we developed new insights, new technologies to do that. For example, just to give you a highlight, a bank would give us their credit card portfolio, for example, all their credit card customers, and they say, what can you tell me about this? How can you help me? And we can run it through our databases, and we can come back and say, hey, look, this person has one credit card with you, but we know they actually have more credit cards, and yours is the least utilized credit card. So maybe you want to reach out to that customer and find out why. Maybe you can offer them some incentive to use your card more, etc. And
so you do aggregated data that way, because not because the thing is it's consolidated data which you are then providing to your individual customer.
Yeah, as the needs may be. The thing is we don't tell them which banks have the other cards, and we don't tell them.
That's correct. Yeah, because there'll be confidentiality breaches there.
Absolutely, and we don't go down that path. But what we try and do is we help these organizations, and in turn, they're helping their own customers, right? So at the end of the day, it's about you and me. It's about consumers, and that's what helps to drive that.
Now, Dennis, you can't talk about CTOS without mentioning Creador. Now, Creador bought into the business a majority shareholding in 2014 from the original founders.
Yep.
Now, what were the critical things and levers that Creador turned that enabled this business to basically grow on steroids?
Okay, so the first thing I'd say is Creador is run by a very, very smart man and a very smart team, and they really understood what this business could be. So they invested in 2014, as you said. They took 70%, took it to 80% eventually. But they knew that this type of business globally can grow very fast and can help a lot of customers in a lot of different ways. And so some of the things they did, first of all, obviously, they looked at the people in the organization, and they brought in some mostly local expertise to support the business growth. So people who understood the products, people who understood the customer base. If you're talking to a bank, get people who know about banks. If you're talking to a telco, people who know about telcos. If you're talking to SMEs, get people who really understand the pain points of SMEs and bring them into the business. And then they started to develop the data assets further. So we had obviously we had access to CTOS and some other things, but they really expanded our data assets and then layered that with the technology and the products to support our customers. And they saw that vision very, very early on and drove towards that. And so they really set the groundwork very, very early for a great plan that worked out very well.
And also one of the things is, if for somebody like myself looking in, if you unpack the strategy, there are a couple of key things that you would probably see through. One of the key things is increase the number of key accounts that were acquired. The second thing is what you mentioned earlier, just the new product introduction, a breadth of digital solutions, and I use your term, to support every stage of the customer life cycle. Sure. Third thing, then upselling and to key accounts, all these new products. Fourth, I think broadening the customer base, because you suddenly started to go to the SME space, and then developing the B2C markets, actually selling products and services to consumers. Have I kind of touched on some of the right points there?
You're absolutely right. I mean, our business is broken down into three key segments here in Malaysia. That's the key accounts, the commercial, which is your SMEs, and the direct to consumer. So in the key account space, I mean, we really have had most of the banks and most of the larger corporates as customers already. We have around 430 that sit in that segment in our key account space there already. But what we didn't do was really service them particularly well. All we did really was just resell reports, information. And we didn't have the real products they needed, which is the digital solutions and the analytics information. Things like our scores. We built the consumer score, we built SME scores, we built other things that support that industry. So we weren't trying to grow the number of accounts in key accounts. What we're trying to do is get to understand what they needed and how we could support them. And we grew the wallet, if you like, within the key accounts. The SME was very different. The SME, we actually grew the number of SMEs using our services very fast. And so we went from having a handful of salespeople to having 150 throughout the country. Wow. And bringing on new SME activations. There are 900,000 SMEs or so in Malaysia, right?
Yeah, it's 97% of the base in Malaysia.
Yeah, but what we know is that all 900,000 don't need our services. There's a portion that do. Well, what does that portion look like? So we did our own analysis, and we came to a sort of a low-hanging fruit of 100,000 SMEs that could do with our services right now that would help their business grow. And so the 150 sales force we have, they go out trying to service these 100,000, and we've currently got on board about 17,000 SMEs, and that grows by about 70% year on year. The third, the direct to consumer. For me, that's much more about financial literacy. You know, I want people to come in, get a copy of the report, understand what it means, and what it means when they go apply for a loan, or when they, you know, get rejected by a bank, for example. What does it actually mean? What's happened? And how can they make sure they get the most out of the information they have? And so there's been a huge education process. We've got involved with a number of government organizations. We've done roadshows, we've done advertising on TV and radio and billboards, you name it, to educate consumers on the need to have that financial literacy, which I think
and also that is a huge problem in Malaysia, the lack of financial literacy, not only, and it's across the socioeconomic groups.
Yeah, and I think the issue is it doesn't start early enough, right? And so I'm not sure how much is taught in local Malay schools around financial literacy, or what it means to understand what your credit profile looks like and what it can do for you in the future. But I think there needs to be more done, and we're doing our part as much as we can to educate. And we're seeing the results of that. You know, we've grown our direct-to-consumer business very fast. We've got over 1.3 million consumers now signed up with us. They get to have a look at their information, and that's growing very fast. In fact, the direct-to-consumer business is our fastest growing sector.
Now, Dennis, acquisitions have been a big part of how the business has grown since Creador came in. Not only domestic acquisitions in terms of actually buying stakes in competitors, but also buying stakes in companies overseas. Walk us through some of those acquisitions that were made, and perhaps some of the lessons that were learned in the process.
Yeah, look, I think there's some very interesting decisions we've made that are going to have long-term positive ramifications for this organization and for the country. You know, our investment in Thailand, in BOL, we took an initial stake of 20%. Recently, we've increased that to 24.9%. Now, BOL, Business Online, is a public listed company in Thailand that focuses on commercial credit information. So they're the leader in that space.
Yeah, they have 59% market share, something like that.
60% market share. They also have a small 12.25% investment in the only consumer credit bureau in Thailand, right? And so now this is a big market. And to have a stake in these means that we can do one thing. We can grow as they grow. Now, they are a good growing business, and for us, the share price has doubled since we invested, so we're very happy. But more importantly, the synergy play is very strong, because BOL is very strong in the larger corporate sector. We're very strong in the SME sector. And so we're looking to exchange products. So we've got our credit manager product, which enables SMEs to do business effectively here in Malaysia. We're looking to bring that into Thailand. Similarly, in Thailand, they've got some great products that support the larger corporates that we want to bring into Malaysia. And so huge synergies play there for us. The other one is more recently, you would have heard about our small stake in RAM Holdings.
Yes.
RAM Holdings is the largest credit rating business here in Malaysia. Now, we often get confused. People call us a credit rating business. Well, we're not. We're a credit bureau or a CRI. So credit ratings, they do ratings of bonds and things like that on corporates and public companies and so on. We don't do that. But what we do is we can support as they look to expand. Now, there are a few things they could be looking to do. It could be they look to go into credit rating of larger SMEs or something else, of which we have data to support. But the thing that really excited me about RAM is the other products, the other solutions, and the analytics that they have. For example, one very topical thing right now is ESG, right?
Yes.
And so they have a solution that can help organizations in understanding their own ESG ratings. Now, we can bring that to our customers. What a great thing to talk to customers around that, how we can help you. And so they have other analytic products. They have a great analytics team. We have a great analytics team. And there is some commonality that we can look to explore as well. So again, here's an organization that we think we can help grow. We think that they've got products that we can give to our customers, and we've got products we can give to their customers. So again, good synergies.
Now, what are the other M&A activities that you have planned moving forward?
Unfortunately, I can't tell you about that. I have to tell my shareholders first.
Okay, let me ask you a different question then. Then Dennis, there is a regional growth story here for the business that you're in. In many markets across the region, the business that you're in is very much in its infancy and it's fragmented. And also because you're trading at a PE of 79, the market expects you to do a few things. Please tell us more.
First of all, I think our numbers this year are very strong, so the PE multiple will come down, and to what we've always been talking about. But the reality is, I think you're right. I think the state of this business in the region is still early stage. So if I look at us, compare us to the larger markets, we are still early stage. Malaysia is probably leading the way in the region now, and we only have 17 products in CTOS. If you look at the US, UK, you're talking thousands of products across multiple verticals and segments. So we are only starting our journey now. So we have an awful lot of space to grow. Even within our existing business, we've got room to grow. So I talked about SMEs. We've got 17,000 and about 100,000 low-hanging fruit. The key accounts is growing very fast with our new digital solutions. The direct to consumer is growing exponentially fast. And then we talk about new synergies with our investments, and we talk about expanding into new verticals and new segments. So an awful lot of space for growth. Regionally, the good news is we have a great story. There are a lot of times, and to be blunt, I've worked for the big boys internationally, and I know how they think. And it's very difficult for them to open doors because they don't have a strong local story, right? So one of the things we've got is a story around a family that started a business. It was taken over by a PE fund. It brought in expertise products, worked on data assets and security and IT and infrastructure. And it became a very nice business that was able to list on the main board and set records for a listing in Malaysia. Yeah. Now, that's a great story that resonates very well in other countries because they're all looking to emulate that. And so we can go and talk to them about, hey, look, this is how we did it. And that excites them. Yeah. And so we get doors open, like BOL, that the others simply couldn't get into.
Okay, and where do you see the execution risks that come with this opportunity?
Yeah, look, there's always challenges. COVID was one thing that clearly was an issue early on. No one really saw this coming, and so there was some investments made prior to COVID that had an impact on those. There are execution risks in terms of the quality of data, being able to match that data to an individual or company. Some countries don't have unique identifiers. All the data is very poorly maintained and not even digitized. And so there are execution risks in that element. Then there's the legislation. So we have to make sure that we work around the current legislation. The good news for us is that Malaysia has a pretty tough legislative environment already. Now, the CR Act that we work in, it's one of the toughest I've seen in the world. And I've been around a while. And so we've done a great job in understanding how we work within that, which means when we go elsewhere, it's not as difficult. And if you want an example of that, things like getting consent from commercial companies before we give a report out. We have to do that in Malaysia. It's probably one of the few countries in the world that you actually have to do that, because there's always challenges around who is a company? Is it the board, the shareholders, the directors, the management? Who gives you consent? Yeah. Right. And so there's all these, and then there's the idea that a company is already public by nature of being a company. So therefore, shouldn't that information be out there anyway? And so, but we've done a great job of working within the legislation. We have a good relationship with our regulators, and I think they're doing a great job. Our regulators are doing a great job as well. And so, we can take all that insight and bring that wherever we go as well.
Now, Dennis, with the benefit of hindsight, what would you and Creador do differently?
We'd have done things faster.
Okay. In what way? Where? Which levers would you push faster?
We took a little bit longer than maybe we could have in bringing in the people and changing the process and increasing the sales force and SME. I think we could have moved faster, but we were a little bit conservative to start with. But we soon realized the opportunity and really went for it, which was fantastic. In terms of other things, the lessons that we've learned along the way is don't be afraid to invest in people. And I think that's a very important lesson to take. I mean, sometimes you've got to invest ahead of the curve, right? Yeah. And that's what it's especially challenging in this environment that we're in right now. But the reality is it can pay dividends.
And what do you think, Dennis, you've three things that you've done really well?
Three things we've done really well. I think we have got them. Like I said, we have got them great people. I think that's very important. I think we've done a great job in building the right products for the right reasons. We're not just building stuff and then hoping it sells. We do a great job in making sure we build products that our customers need and that they want and that they can use. And I really do believe also that we have great relationships with our customers. And I think that's very, here's a fact that's quite amazing. We haven't lost a key account customer to a competitor for a number of years, 5 years or more. Now, that tells you something, right? It tells you that they need us, they want us, they like us, and we have good relationships. And I think that, we've done a good job in maintaining those relationships. It's not easy, not always easy, especially in everyone's trying to cut costs and things are challenging out there.
Yes.
But the reality is we work on a value proposition. We prove the value of everything that we do. And we have those strong relationships that allow us to do that.
So Dennis, I'm going to ask you, you're a veteran of this industry, you're an ex-experienced guy for many years, among other things. CTOS, however, now is a different kettle of fish from a management perspective, because you've got to manage a whole lot of stakeholders, ranging from the original founders to Creador, to 23 cornerstone investors and institutional investors in a public company. Now, what are some of the management lessons you'd like to share with your peers that they could benefit from?
Look, the first thing I would say is don't accept the norm. So, for example, reporting times for first quarter announcements. We think we're one of the first companies that released our first quarter before we listed. We released our second quarter, first half numbers within 15 days of our listing. We want to be setting new trends, and I don't think companies should be afraid of that. There's a thing of, let's not go first, let's not be quick, let's not do this. Well, we're the opposite. We want to be setting the standard. But the second thing is transparency is very important. We're very open and honest with our shareholders. We're very open and honest with our customers and with our staff. And so transparency, I think, is critical. And the third thing I would say is that, you at the end of the day, and this is a bit of a cliche, but you're all one team, right? I mean, at the end of the day, if you don't work well together, if you don't act as a group, an organized team, a group, then you won't go together forward. So, working with our board, working with our shareholders, working with our staff, working with our customers, bringing that all together is very, very critical. And I think the reality is that transparency helps that as well.
Now, Dennis, one of the things that that makes the CTOS story really good is how literally a couple of entrepreneurs, family business, then taken over by PE company, and then just accelerated to the next level, and then going regional. There are a lot of traditional family businesses on Bursa Malaysia, which perhaps, they basically are listed on Bursa Malaysia with a minimum float, and the businesses kind of chug along, but they could perhaps get a fresh growth spurt from the entry of a PE fund like Creador or Navis, for example. What advice would you give these companies?
Look, I wouldn't be afraid to explore that. I mean, we were lucky. We had a fantastic PE fund that came along with a vision, and it was a long-term vision. I mean, they've been with us now for 8 years. And so choosing the right people to work with is important, but don't be afraid to explore that. I mean, open the doors, let them talk to you, see what they can do for you, listen to them. Not only will they bring in capital, but they'll bring in experience, they'll bring in knowledge, they'll bring in people who have been there, done that, maybe not in your industry, but just generally. And together with your industry knowledge and their business knowledge, you can really change a lot. So my advice, explore it, choose a good investment company like Creador or someone else that you're comfortable working with, and just go with it. I mean, really. But if you're not comfortable at the same time, if you're not feeling it, walk away. And that's another thing, right? Be prepared to just say, no, it's not for me. Because if you're not comfortable, it's not going to work.
Yeah, because it's really a long-term marriage, isn't it?
It's absolutely a marriage. And, your first few years is like you're dating. The next few years, you're getting engaged and you're getting a bit more serious. And then from then on, you're married. And the marriage is very successful, right?
Now, there's a lot of expectations, Dennis, around CTOS Digital and its share price, because Mr. DIY, which is also a Creador investee company, the share price has absolutely soared since its IPO.
Sure.
However, there's one big difference when I was looking through and doing some research. It's about liquidity. Now, CTOS has about a 50% free float, whereas Mr. DIY has only a 15% free float. What are your thoughts on this, Dennis?
Yeah, look, I think the reality is that the demand was high for our business, right? And so you talked about the number of institutional investors. The retail demand was set a new record as well since 2014 or something. I think it was the largest float. So I think it's about meeting market demand. So the demand was there, and the last thing we want to do is constrict that, right? We want to make sure that everyone gets a bite of the cherry, that we can make sure that everyone grows with the business, and I think that was important for us. You know, if the demand wasn't there from day one, it would have been a lot less, to be honest. But the demand was strong, and I think it was the right call. And I think we you know, our price has done okay. You know, looking at the latest analyst reports and targeted prices, are certainly very good and moving up. And so the fundamentals are there, which means that, you know, we've had a very strong first half in a very challenging time, I may add, right?
Yes.
With COVID, we had fantastic growth rates. Normalized Panama grew 70% in the first half. And so we've had very, very strong fundamentals, which can support that.
Now, Dennis, any final thoughts you'd like to leave us with before we end this conversation?
Yeah, look, I think coming back to what we said earlier, everything that we do, we focus on the customer first. And I know that's a cliche as well, right? Everyone talks about customer-centric, but the reality is it's exactly what you should do, right? So when we look to build products, when we look to get data assets, we say, what do our customers need? What are their pain points? And we don't guess them. We go and talk to our customers, and that comes down to that relationship side of things again, right? So building those relationships so you can have honest, quick discussions with your customers. Hey, what's going on here? How can we help? And then finding the products that will work. You know, we don't have to try and reinvent things. There's plenty of products globally that we can look at, we can take advantage of, can see if they work here, whether the assets, the data assets behind it can make it work, the technology's here to support it. And I have to say, in Malaysia, you know, the people and the technology is second to none. You know, people shouldn't be afraid to using local domestic people to really build up their workforce and try new things. I mean, we work with AI, we work with all the latest technologies, and it's all done locally. I think I'm the only guilo or Angmo or whatever you want to call me in the company at the moment, right? So, you know, I think we're very much a Malaysian business, and we're very proud to be a Malaysian business. We're happy to shout that from the roof, that we're a local business. As you said, family grown, family run. Now we're a large listed company on the main board, and we're very proud of that. And the company's very proud of that. Bring your people along on that journey, and they'll love it as well.
Now, Dennis, it's been a fascinating conversation. Thank you very much for taking your time to be on the show.
That's a pleasure. Anytime.
Now, I'm Brian Fernandez, and I've been speaking to Dennis Martin, Group CEO of CTOS Digital, on Biztech's CEO Conversation Show. This video will be on our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thank you very much for tuning in.